This is Alan Bush with the daily financial forecast for Thursday, June 2nd. Starting out with the stock index futures, we are seeing some pressure developing. This primarily due to energy prices, at least crude oil, under some pressure. This after OPEC apparently not agreeing to some type of production ceiling. However, we do feel that there will be recovery later today. In fact, I would not be surprised to see stock index futures trading higher on the day. Longer term, nothing has changed in our long-term view. Still believing that the bull market is intact, and I would not be surprised to see new highs for the year later this month or in the first part of July. Also in the currency markets, the dollar index just a little bit better. We're seeing rather narrow ranges in the dollar and some of the other currencies. Longer term, we believe the dollar will probably edge higher as interest rate differentials continue to support the greenback. Also, the euro currency a little bit better. This after the European Central Bank left interest rate policies unchanged as generally expected. And in the yen, we are seeing higher prices again. There's a growing feeling that if the UK leaves the European Union, and of course there is that referendum on June 23rd, that funds may be flowing out of the UK looking for safety, and the yen is thought to be one of those places where funds could land. Also, this could be beneficial to the dollar index. At least that's the prevailing view. My feeling is that if there is a Brexit, so to speak, that not much will change, and I would not look for much of any outflow of funds, but that seems to be somewhat of a minority opinion. Also in the currency markets, one more thing I'd like to add, a little pressure in the Canadian dollar and the Australian dollar as crude oil comes under some pressure. In the interest rate markets, prices higher, this primarily due to stock indices under some pressure, crude oil under some pressure, both of which are bullish for the interest rate futures markets. Also, the probability of a rate increase at the upcoming meeting on the 15th of this month, dropping just a bit now to 21%. Yesterday it was 23%. Our feeling remains that the Fed will not be raising interest rates anytime soon. Also, we are getting up to some major resistance areas in the June Treasury bonds, right around the 166 even area, and I would view that as an area to establish short positions. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.